Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the euro currency. So in weekend we discussed the price performance on intraday charts and said that overall performance doesn't look like bearish. So we suggested that probably we should keep an eye on possible reverse hand and shoulders pattern or a kind of this pattern because price action was relatively choppy. So it was difficult to recognize any clear pattern, but overall performance was according to this pattern, and market, as you can see, it jumped up, taking out this top. So by taking a look on futures chart, we see that we do not have any grabbers. So if we take a look at the euro currency here, trend has turned bullish on the daily chart. We have no grabbers. Market stands in a minor pullback. Another interesting moment stands around as the dollar index pattern, as around 10-year bond pattern. So if you take a look at the dollar index, you could see that market stands at the edge of the erasing of the weekly pattern, which is important, while on the 10-year bonds, grabber that has been formed is already erased. So you can see just collapsed. The only change that could happen, because this is weekly chart, is only if market by the end of the week return back up and close above the MA city. Potentially we can't exclude this just because we have the payrolls by the end of the week, but at this moment you can see that this significant collapse in yields has actually erased the previously formed weekly grabber. So all this stuff has happened on the background in recent statistics, mostly indicated that situation in the economy is becoming softer. Production is falling, consumption is falling, savings of the households for spending stands at the minimum levels, delinquencies are rising on the credit cards, and all this stuff is really healthy background for the starting of the rate cut. At the same time, big banks and experts stubbornly tell that inflation is high and Fed will not cut rate in this year. You know our position, we discussed this in a weekly report. We suggest that currently the rate change might become the political factor, because for the market, for the government and for the regulated authorities, it is more important the bubble on the stock market. They can't let it crash, at least until elections, before elections. So, and with always, they will try to support it and keep going higher, stock market. From that standpoint, inflation takes the secondary place. Besides, unemployment still stands low, so theoretically, as we suggest, that July might be the turning point. So we will see. So speaking about the technical picture right now, we need to keep an eye on a few moments. First of all, on the targets. If we speak about the daily chart, that might be 109.70. Mostly because I also think that reverse head and shoulders here, larger scale, also might be very important. So this is the first destination point that we need to keep an eye on. On the 4-hour time frame chart, you could see that upside breakout has taken the shape of the butterfly. 127 extension is already done. Market stands in the pullback, and here it is important to keep an eye on this trend line, because if based on the other markets and right there as well, we see that this is probably some serious breakout, so some serious background stands behind it. And from that standpoint of view, we do not want to see that your currency return it back down in this trending range. We want to stay outside. In this case, the situation will be perfect and market will keep chance on the further upward continuation. Here you could see that next butterfly target is 109.50. So it means that with the daily target together, it's 109.50, 109.70. So approximately nearest destination point. Besides here, you could see that general upward action was relatively strong, so not really very soft. Trend stands bullish on all time frames, I mean daily and intraday charts. On the hourly chart, you could see what has happened with our hand shoulders pattern. So here's was retracement in the beginning of the session that we discussed, although we thought it might be slightly lower, or actually to say hope that it will be slightly lower somewhere to the 108.10, 108.15 area, just to stay in harmony with these lows, but it has become slightly smaller, and you can see this action has started. But you can see in general the shape, although it's a bit skewed here, right arm stands very small and fast acceleration, but it is possible to recognize here kind of the hand shoulders shape. This target of this minor pattern is done, so you can see OP stands 109.20. So it's almost has been completed, and I think that minimum target of this pattern has been achieved. Now we see the retracement in two levels. Preferable this market will stay above 108.80 trend line together with fib level. If it will be able to hold it, that will be just perfect. If not, that's the level that we theoretically could accept as well, because it will be not really deep penetration here, and it's 108.60, 108.66 confluence. Well, it's in general acceptable. Deeper breakout, it will be bad thing for a bullish context and makes it significantly weaker. So if you plan to take the long position, probably you need to stay focused on these two levels for this purpose. So that's actually all that we have. So we have discussed targets, levels for entry, support levels. Let's see what will happen.